I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Welcome to your 3-minute update on the U.S. real estate market as of late June 2025. Let's take a look first of the market overview. The U.S. housing market is experiencing a notable shift. After years of tight inventory and rapid price growth, the landscape is changing. Inventory is rising, sales are mixed, and affordability remains a central challenge. Home sales took a significant hit in May, dropping 13.7% from April and falling over 6% compared to last year. This is the lowest level seen since the pandemic, with the South seeing the steepest declines. In contrast, existing home sales surprised on the upside, ticking up 0.8% in June for the second straight monthly gain, though they remain slightly below last year's pace. Inventory is building across the country. There are now over 500,000 new homes for sale, enough to last nearly 10 months at the current sales pace. This marks a clear move toward a buyer's market, especially in the South and West, where new construction has outpaced demand. For sellers, this means more competition and a growing need to price homes realistically. About 40% of homes are now selling below asking price, and price cuts are increasingly common. Despite the inventory surge, prices are still edging up. The median new home price is $426,600, up 3% from last year. Existing home prices are also rising, with the median now at $422,800. However, with more homes sitting on the market longer, the pace of price growth is expected to moderate. Mortgage rates have dipped slightly but remain high, with the average 30-year fixed rate at 6.76%. This keeps monthly payments elevated and continues to sideline many potential buyers, especially first-timers. Cash buyers and investors are stepping in to fill some of the gap, now accounting for over a quarter of all sales. The Northeast and Midwest are outperforming, with modest sales and price gains thanks to better affordability and steadier demand. Meanwhile, the South and West are seeing slower sales and more unsold inventory, as higher prices and rapid construction outpace local demand. Buyers now have more options and negotiating power, but high rates still limit affordability. Sellers must adapt to increased competition, price strategically, and be prepared for longer sales cycles. Investors should watch for opportunities in regions where demand is holding up, particularly the Northeast and Midwest. The market's next moves will depend on mortgage rates and broader economic trends. If rates fall, pent-up demand could return. For now, expect a more balanced market, with buyers gaining leverage and sellers needing to adjust to new realities. That's your 3-minute market snapshot. Stay tuned for further updates as the market continues to
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Welcome to your 3-minute update on the U.S. real estate market as of late June 2025. Let's take a look first of the market overview. The U.S. housing market is experiencing a notable shift. After years of tight inventory and rapid price growth, the landscape is changing. Inventory is rising, sales are mixed, and affordability remains a central challenge. Home sales took a significant hit in May, dropping 13.7% from April and falling over 6% compared to last year. This is the lowest level seen since the pandemic, with the South seeing the steepest declines. In contrast, existing home sales surprised on the upside, ticking up 0.8% in June for the second straight monthly gain, though they remain slightly below last year's pace. Inventory is building across the country. There are now over 500,000 new homes for sale, enough to last nearly 10 months at the current sales pace. This marks a clear move toward a buyer's market, especially in the South and West, where new construction has outpaced demand. For sellers, this means more competition and a growing need to price homes realistically. About 40% of homes are now selling below asking price, and price cuts are increasingly common. Despite the inventory surge, prices are still edging up. The median new home price is $426,600, up 3% from last year. Existing home prices are also rising, with the median now at $422,800. However, with more homes sitting on the market longer, the pace of price growth is expected to moderate. Mortgage rates have dipped slightly but remain high, with the average 30-year fixed rate at 6.76%. This keeps monthly payments elevated and continues to sideline many potential buyers, especially first-timers. Cash buyers and investors are stepping in to fill some of the gap, now accounting for over a quarter of all sales. The Northeast and Midwest are outperforming, with modest sales and price gains thanks to better affordability and steadier demand. Meanwhile, the South and West are seeing slower sales and more unsold inventory, as higher prices and rapid construction outpace local demand. Buyers now have more options and negotiating power, but high rates still limit affordability. Sellers must adapt to increased competition, price strategically, and be prepared for longer sales cycles. Investors should watch for opportunities in regions where demand is holding up, particularly the Northeast and Midwest. The market's next moves will depend on mortgage rates and broader economic trends. If rates fall, pent-up demand could return. For now, expect a more balanced market, with buyers gaining leverage and sellers needing to adjust to new realities. That's your 3-minute market snapshot. Stay tuned for further updates as the market continues to
All right. Welcome, everybody. And we are back in our favorite time slot, which is Thursday at 11 a.m. Central Time. This event is brought to you by Real Estate IQ. We're going to talk a lot about how we can make deals We actually have a couple of really exciting deals that we're closing this week. So we'll be doing and sharing with you some case studies of the deal. And then we'll move on and have our guest speaker, John Huang, talk about entrepreneurship and financial literacy. So welcome, everybody. So Real Estate IQ, just a quick intro. We're a deal generation company. We have everybody's favorite product is the off-market leads, which allows you to have quality conversations with motivated sellers. Now, beyond that, we also have created a deals program and a funding program that brings you directly the off-market deals and funding that you need to purchase the deals, to acquire the properties. Disclaimer, all the information shared here is for education purposes only, and we don't offer investment, financial, or legal advice. Just knowledge share. And if you have a deal and you need help with either closing the deal or understanding the process, you can either call or email me, and either I can help you or I will connect you with a mentor who can help you. So today's agenda, we just finished up with our welcome and introduction. We're gonna have some case study and market updates. I know if you followed the market very closely, you probably noticed that the mortgage interest rate has dropped pretty significantly. So a lot of real estate investors are very excited about that because it means, any kind of loosening of credit creates a tailwind for real estate investments. And then we obviously have our educational topic and our deals as well. All right, so let's jump into the market update. The average 30-year fixed interest rate has now dropped to around 6.5%. For FHA loans, it has dropped even lower than that, about, I think, mid 5%. Inflation and affordability remain challenges due to owning costs, right? Mortgage, taxes, insurance, and utilities. That's putting pressure on households, especially on first-time home buyers. Home prices are still creeping up, but the growth is slowing. Many markets are seeing flat or slightly positive year-over-year gains. Inventory has been growing. We're seeing active listings are up very significantly, up to 20 to 25% comparing to last year in many places. Rents, the rental theme, rents are still rising, but not in breakneck pace as seen in past years. National occupancy in multifamily sector still relatively high, and in a lot of metro areas, we're seeing rents are starting to slip or grow very slowly. All right, so let me welcome our first guest speaker, our host as well, Tamla.
Hello.
Hey, I love your painting in the back. I don't know if I have told you that.
Oh, thank you.
It's so nice and colorful.
I like color.
So we have two case studies. Actually, yesterday we were just meeting up and talking about these two closings that we have this week. The first one is Brazos, and actually Tamla has to run in less than half an hour to this closing. Maybe Tamla, you can share with us a little bit about the property and your approach on getting this deal.
When the property came on MLS, I saw it the first day of listing, and I called the agent, made an appointment to go take a look at it. Very impressed. The property had been completely redone. It was move-in ready. It wasn't really a duplex because the second unit only had a bathroom in it, did not have a kitchen in it. But I thought it's not going to take much to put a kitchen in here, and there's perfect location, water's there, electric is there. So let's think about how we're going to do this. And we got a little creative here. 2 days after I looked at it, I called the listing agent and expressed an interest in purchasing this if the owner would finance it. And she and I kind of went over some terms that she felt would be agreeable, and she presented it to the owner, and the owner said yes. So this was it. I mean, this is just a wonderful little property. We're going to end up having 2 units out of it. The main house is a 2-bedroom, 1 bath. The other unit will be a 1-bedroom, 1 bath. All of the appliances are in the main house. We've already got it listed for rent. Actually, there's a showing on it. I signed papers at 1:30 today, and we have a showing for a tenant, prospective tenant, at 2:00 today. So hopefully we will have this rented before the end. Well, I can't say before the end of the week. I'm going to say Tuesday of next week. If all the background checks and the credit checks and everything comes through, then that will be great. So this was a nice little property, and this is, I'm going to say, with creative financing, because the owner agreed to finance. We have got financing for, I believe it's 3 years, and then there's a balloon payment. But that's okay. In 3 years, the property will more than likely have increased in value. We will have made money from the rent, and if we want to turn around and sell it, we've got a property that will probably sell, and it's going to start cash flowing immediately. So this is a very good thing. I'm excited about it.
Yeah, and the main house is listed for $1,500 a month, is what my understanding is. So we're hitting that 1% just for the main house, and then the other one by one is kind of gravy. It's kind of like, pure profit potential.
Yes, we're gonna advertise it at $800 a month.
Mm-hmm. And Tamla, you share with me something creative that I don't know if you already have someone in mind, but you were gonna have a tenant in there to put in a kitchen for a couple of months of rent. Do you already have something in mind, or was it kind of a creative idea that you?
No, I've already spoken with someone that has the knowledge, the capability of putting the kitchen in. For rent, for a few months rent, we haven't worked out all the details. He's still thinking about, what it's going to take and what he thinks would be an agreeable amount. We will provide the appliances for the property. I don't expect him to buy that. And we will provide the cabinets. But for the labor, I have been talking with a contractor that is kind of he's getting ready to move out of where he's at because he wants to be closer to where he's working now. So if this works out, then that's just even better as far as I'm concerned.
Yeah, and the fact that we can immediately bring in a tenant and have that rental cash flow makes it such a good deal, because we're talking about actually end up being less than $7,000 to the closing table to acquire 2 doors.
Yes, and I did learn something that I did not know last week. This property has 1 electric meter on it. And I spoke with my electrician to see what it would be costing to divide the electric up, put 2 meters on it so that each unit could pay their own electric. And he told me that there is a device out there now that you can attach to a single meter. If there's a breaker that is running off to a separate unit, you can attach this device to the meter, and it will tell me how much electric usage is being directed towards the other unit. which means that I can still separate out the electric bill and charge each one of them separately, send them a separate bill for their electric, each unit. And I do not have the expense of having to completely put in a new service for the 1-1.
Yeah. And how much will it cost to put in a split like that? And I know you've been getting quotes. We're putting it on another property.
Okay, if we split up the property with 2 meters in the location that I am in, purchasing property, the minimal price will be approximately $2,500. And that's before they have to run new wiring or anything. That is just putting in a new meter box with the breakers and asking for new service. This device is it's a couple of $100. So we're saving at least $22,000 to $2,100 by doing this.
You know, I have heard about this before for like a commercial kind of like a multifamily type of a setup. And I think what they do is, and this is just an idea, because in a sense, you're providing credit for the utility bills, and you can actually charge a different rate or like charge a little bit of markup on top of that to provide a service. But
yes,
just bring it up for reference, for awareness. Okay, so for anybody have questions about the deal or any additional deals, we got one more deal for you. And actually, Ethan looks like he has a question. What marketing form or company did you use to find a tenant? This is a really good question.
We have, Steve and I have a property management company that we use. She is also a real estate agent. She finds a lot of properties for us also. But when I am ready for her to start marketing the property, I basically just shoot her an email with information and give her the code to get in the door, and she takes over from there. I mean, she literally gets back with me and tells me, hey, this is what we can market this property for rent, and I turn it over to her.
I find, Tamla, and thank you for this question, Ethan. I find that having a local expert who can kind of give us a highly reliable rental, how much we're going to rent it for, it's so valuable because, we can run comps and all that. But, kind of having someone who has, kind of hands on the ground, so to speak, and just kind of understanding how the market is doing, it gives you so much more confidence. And, you know how quickly the unit is going to move too.
Yes.
Based on
And
the rent price.
One of the nice things about using a property manager is she's got a list of tenants, prospective tenants now that she has a list of tenants that are looking for homes. So when one comes available, that is what they're looking for. She can make a phone call and say, hey, I've got a house available. You want to come take a look? So, and that's a good thing too. When you're doing this, find, and I know Steve and I have talked about this, but put your team together of who you want to work with. Like I've said many times, if you're not a real estate agent, find you a real estate agent you want to work with. Find a contractor that you want to work with. Find a property management company that you want to work with. When you start doing this full time, your time is going to become extremely valuable. And if you're looking for properties and you're basically the person at the top that's going to make sure that all of these other things need to be done, that they're getting done, you can't do all the other little things. You just have to, I have to make sure that this property gets closed today. All the documents are there. so that it's not going to close. It's not going to stop the closing. I've already contacted the property manager to let her know we're closing, but there's no way that I could be at the closing at 1:30 today and show this prospective tenant at 2:00. So I've turned that over to her. Another thing that I have learned is that when you start doing this and you've got more than one property, people are going to ask you, well, what are you renting that property for? Well, do you have any houses that are available? I'm looking for this. Do you have anything? If you stop and concentrate on what you've got available, what the rent is for each one of them, you're not making sure the next one is ready. So when someone asks me those questions, I immediately say, we have a property management company that handles that. And I would be more than happy to text you, or email you her information, and please contact her because she knows what's available right now and what the rent is. And give that responsibility over to somebody else, and you stay focused on finding the properties, making sure they're getting rehabbed, and making sure they're getting either on the market to sell or on the market to rent.
Speaking of that, Tamara, Neil has another question which I'll highlight in a bit. I just had coffee with a friend over the weekend, and he's telling me he's doing self-leasing. I guess he's kind of self-managing, and he's getting the tenants from Zillow. And it's not a good success story, unfortunately, because the tenant that just left didn't pay rent for like 2 months, and he had a 1 month deposit, but it didn't pay for those 2 months right before he left, and then this person was also trying to help. Go, hey, I'm gonna help you, replace this tile or do this fix certain things for this much money, and it's kind of overcharging him. And so I dig into that a little more, and he said, yeah, the people from Zillow, they are around 500 credit score, and that's kind of the situation that he's looking at as he continues to self-manage. He's looking at people that have 500 credit score from Zillow leads, and that's where he is now. What are your thoughts and your comments on that, and some recommendations for you?
Don't do it. Don't. I won't do it. I have self-managed properties before, and I'm a softie, just absolute softie. I will rent to anybody that applies. I will listen to any sad story they have, and I will get no rent for several months. And then I have a hard time getting them out of the house, and they usually tear the house up.
That was kind of the situation for him too, yeah.
Yeah, I know my strengths and I know my weaknesses. My weakness is I'm a sucker when it comes to people that tell me a story. So I took myself out of that equation. I hired a property management company that I trust, that I depend upon, and that find me good tenants and take care of my tenants. I don't meet my tenants. Never meet my tenants. That way they cannot give me a sob story. They cannot give me a poor, pitiful me. They have to deal with the property manager, and she handles everything. Even if it's an eviction, she handles everything.
So thank you. Neil has a comment about installing additional meters, utility providers installing additional meters. at no cost?
We do not have that ability around here. Our utility provider will not do that. They install the meter. That's not the cost. It's the service, the meter box, putting in the new meter box so that we have a second service, separating the wires out. And when you do that, you have to meet current code, possibly for both meters, but most codes change very often. So if you're putting in a new service, you're going to have to possibly upgrade the service that is there and definitely meet the new code for the new service. Once that's done, the utility provider will come in at no cost other than the normal connection cost, which can run anywhere from $30 to $50, depends upon which provider it is.
Okay. One more question, and then we'll move on to. Can you elaborate? I thought this is a really good question. Can you elaborate on the creative financing? Aside from the 3-year balloon, how did you start a conversation? And what was the terms?
Okay, well, I always start out the conversation for owner financing by merely asking either the owner if it's a for sale by owner, or the real estate agent that the owner has hired to list their home. And I always ask, will the seller consider owner financing? Because at that point, you're going to get a yes or a no. If they say no, then don't even bring it up anymore. If they say yes, then you can ask the seller or go through the agent to ask the seller, well, what would they like for the terms to be? The agent may come back and ask you, well, give me something to throw their way or to give them information on. And I always ask for a lower interest rate, but higher than if I went to the bank and got a loan. If somebody's going to owner finance something, reward them for it. I always try to get away with as little down payment as possible. It's a conversation that you start because it's it may not end with that. You may not get everything you want. But when they tell me yes, they are willing to owner finance, you've got the door open. At that point, everything is negotiable. And then it's just finding the right fit. And they'll say yes. I don't know. The seller in this for this property is an investor also. They do not live in the area. The house has been vacant for many years. They've been slowly remodeling it, holding on to it, whatever. But I've watched it for 2 years and no one's lived in it, but there's been someone over there occasionally working on it. So my thought process is that, hey, they want to sell this because it's costing them money. Then I looked up the information to see if there was a lender involved. There was a note. Let me see what I can find out there. So look up all the information before I ever ask the question. And then I learned at one of the real estate investor guru meetings that I went to several years ago and have kept up with this lady, that make 3 different offers. One, an all cash offer. One, an offer with financing and some down payment. And one, an offer for full price and interest, no interest, 0% interest. So this particular buyer accepted the offer with the middle of the road, the one with a little bit of a down payment. and a balloon payment. She doesn't want to be carrying the note for 15 or 20, 30 years. And we paid a little less than asking price for the property. But she was selling it as a single family home, and we're turning it in. Tomorrow, we will start separating the units out and advertising them as a duplex. So as an investor, we've already increased our cash flow in this property and made it worth more.
So
is that the answer? Does that help? Does that give you an idea of what?
Yeah. And Ethan, feel free to maybe if you have follow-on questions. So it doesn't look like we have time to look at the second case. We'll save it for next week. But Tamla, I thought yesterday we had this conversation. You were giving me, sharing with me, how you deliver an offer for the motivate seller, and the trust building and the trust gaining trust and all that. I thought that's so valuable for our audience here. Would you tell us a little more about how we approach and how we can I guess give an offer and then win the deal?
I always approach a seller by trying to build a relationship. So I was telling you, Steve, yesterday, most properties that you buy, the seller is going to be emotionally attached to that property one way or another. It's either their home, their parents' home, their grandparents' home. They're more than likely emotionally attached to that property. Building a relationship with that seller builds a trust. And listen to their stories about the house. If they're emotionally attached to it, they've got stories about that house. And they want to see that house grand again. Even if it's a tiny home, they want to see it. They want to see it grand. And they want to sell the house. They want someone to have the house and to work on the house that is what they feel is emotionally attached to that house as they are. So I always start with just bringing up a conversation about the house. Like I was saying, you just start talking to them. You get the seller to start talking. And in the process, you can ask them the questions about, how old is the roof? When was the last time the electrical was updated? Tell me a little about the plumbing. All of this stuff can come in the conversation. Most of the time, investors are taught to basically have a piece of paper and have these questions on it. Like, when's the last time you replaced the roof? What about the electrical? How old's the electrical? Do you have new electrical? And the plumbing? And what does this house need? If you had $15,000 or $20,000, what would you do with the house? The better thing to ask is in the conversation. Don't just come out with these like this. Just start chatting. Just start talking with the owner. And in the process with the owners, ask these questions. You will get the answers plus a lot more information. When you're talking with someone that has lived in a house, they may not necessarily know what they would change with $15,000 or $20,000. They may not change anything. So you can't really get a feel of what needs to be done with that. And so that's the way I kind of start talking with the seller, opening up a conversation, building a relationship. And I usually always in the conversation somewhere around with the, let me work my numbers. I'll get back with you. I have to make some money out of this because this is my business, but I do that very softly when I'm talking like that, and let them know that, it's going to be, everything's going to be good. This is going to be a good thing. And I usually ended up with, my numbers, when I make you an offer, they may not work for you, but we're both going to leave as friends. We're not going to leave angry. We're not going to get upset with each other. And I usually always say, $5,000 isn't going to make or break a deal. Because when I bring them those numbers, I'm going to leave some money in there so that I can go up on the offer. The seller is always going to want more money, 99% of the time. So make sure you have not come back with your top offer, because they definitely know when you say that, they know they can get $5,000 more out of you. And usually you will end up paying that $5,000 more. But it opens up the door to let them know that this is not your final offer. You're willing to talk to them a little bit more. One of the other things that I know I told you, Steve, yesterday is I never go in a house and start pointing out the things that are wrong with the house. Let the seller tell you what's wrong with the house. You can notice what's wrong with the house. But nobody wants to hear what's wrong with their house. They want to know that their house has the capability of being a very, very nice home. And that should be completely, totally reiterated to them over and over. Oh, yes, I certainly see how beautiful this home can be, or how beautiful this home was 20 years ago, 30 years, when it was built, when your grandparents lived here. I'm sure, I bet you have so many good memories of coming here and visiting with your grandparents. Another thing I told Steve yesterday was I don't walk up with pen and paper to start taking notes when I'm looking at a house. My main focus is to build a relationship with that seller. You cannot build a relationship with that seller when you're asking questions and your head's down and you're writing. You got to have a face-to-face contact communication system with that seller. So remember what you see. When you get back in your car, write those notes down then, what you saw, to remember. Ask them, take your phone with you. Ask them, do you mind if I take some pictures or a video? Most of them will say, sure, that's fine. But you cannot build a relationship with someone when you're not paying attention to what they're saying.
Got it. Thank you. Thank you, Tamla. That was I took a lot of notes yesterday also on the conversation. What I noticed, because we also saw a property together, and this time it was an agent kind of showing the property for us. And I think your style, Tamla, is just calm, and you already know the questions that you were gonna ask, and you're not trying to pressure someone, or you don't have a list of questions you need to get down to, and just a very chill style to build that relationship.
Yes, it's building that relationship. It's a business deal, but it's also an emotional deal for the seller.
Mm-hmm. Cool, thank you. Well, we're gonna have a cliffhanger on this case study, which I'll show you next week. And for now, we need to move on to our next segment, which is about entrepreneurship and financial literacy. So let me invite our guest speaker, Mr. John Huang. John is our executive partner here at Real Estate IQ, and he has lots of experience in executive management and also in finance and training. I have learned so much from you on how to lead a team and train a team and make sure the team can scale. So really happy to have you up here and give us that third part of the talk. So welcome, and we're gonna bring up your slide here as well.
That's right. Can you see my screen? Yeah, it's up and running. Well, thank you all. Thank you, Steve. I'm very thrilled to be here to share the third part of this topic. The topic was spiritual entrepreneurship. Um, talking about which, I am a entrepreneur for many years, since 2005. I had a side business, I have a part-time business, then I have a full-time business, and then um, in 2016, I basically ended my corporate job and dedicated myself to entrepreneurship, right? But meantime, it is spiritual as well. Um, in the last two sessions, I talked about, entrepreneurs are preachers. Whether you like the title or not, you are a preacher. You have to share your visions and missions, and you have to overcome your own kind of a withdrawing and your obstacles to essentially get people convinced to rally behind you, right? That's what the entrepreneurs do, and that's how you ended up getting the A round, the B round, all the way to E round of fundings for your business. Even by managing your employees or your volunteers, you still need to have that kind of an entrepreneurship mindset and a spiritual mindset, right? Spirituality has also, just as Tamla was talking about, connection, right? And we always talking about building relationship, but tangibly, how do you build a relationship? It's always a warm and fuzzy. It's an abstract concept. I don't know if you notice that or not. But what we're saying is building relationship is what? Is spiritual connection, okay? Spirituality, right? You connect on something. Well, if you see something you like it, that's a spiritual enlightenment, right? People connect on that. So in terms of entrepreneurship and spirituality, we already proved the points there. Um, last session, session two, I talked about entrepreneurship is uncertainty. Uncertainty in terms of market, in terms of many things, but primarily is the uncertainty about yourself. Okay, and today we're going to delve into that a little bit further, and essentially help you to build your real estate business and to have some beacons in the darkness for leading your business to success. Okay, so my title is entrepreneur equals uncertainty and equals self. Okay. Just a little bit of kind of a recap. Last week I talked about why entrepreneurs were frustrated. Okay, where the frustration came from, and how do you untangle that? And we're already talking about it. It's the decision and execution being a problem, right? And I said today we're gonna hopefully put a pivot to that and give you some answers on how not to get entangled on decision making versus execution. All right, so tighten the belt. We're gonna get the writing. So first of all, I want to test your eyes, everyone. Okay, in your chat, anybody can recognize this painting? Anyone knew or was aware who is the artist? Take your time, okay? I'll give you a minute. Or you can use a Copilot, or you can use some ChatGPTs to do search, but it's rarely known. It's rarely known. So feel free to type in the chat. Who is the artist of this painting? Oh, Ethan, you knew everything. Wow. Well, even though your spelling isn't like Dutch spelling, but if I may show the rest of the folks another painting. Here we go. Y'all know this one. Okay? Y'all know this one. So how come the first painting is least known? And actually the first painting was a Bible, and it was a okay, yeah, it was a Bible. It was it was a notebook, and it was a missal, right? It was a religious painting, but rarely people knew that. Okay, so today we're gonna get started on Van Gogh's story. So for those who don't know, Van Gogh grew up in a Christian school back in Dutch, right, Netherlands. And ever since he was young, he has always aspired to become a preacher. Okay. And so, well, part of that is because of his parents and his grandparents, right? They're all famous preachers, pastors. Um, so he decided to go to a seminary, right, at a young age. However, even when he tried very hard, somehow didn't work that very well. He's not a good student. He's not that smart, but he worked really hard. In his spare time, he actually went to Paris and went to different places, especially in the art gallery, to do some brokerage work and then sell art in his uncle's shop. He actually went very successful as an entrepreneur. He was really good at the work. However, his mind, spiritual side, his mind was always on becoming a priest, becoming a pastor. So he went on to take a examination for the seminary. He failed. Okay. He pressed on. He went on to become an assistant to a famous pastor. Okay. In the meantime, he was preaching on the street. He was actually a preacher, a street preacher. However, the sponsorship says that he is not doing well. Okay, his preaching is dry and it's just not impressive. So basically, the sponsorship was withdrawn, and he lost his opportunity to go to seminary again. So withdrawn, so defeated, he decided to dwell on his painting skills. So he learned his painting skills from his brother and from his relatives, and he did the sketches and he did the different oil paintings and water paintings, and it turned out, he really likes it because that's how he kills his time in between trying to become a priest. Okay, to follow his parents and grandparents' footsteps, and he still was trying to get into the seminary or get into missionary trip. He actually went on a missionary trip to take care of lepers and then the sick people. And the place he went on was in a mining area where people were poor, sick, and need a lot of help. So he decided to dress like them and they eat like them and they live like them. So unfortunately, the missionary organization decided he is not dressing appropriately for a pastor, and so decommissioned him. Oh boy, oh boy, he's such a spiritual entrepreneur, isn't he? Wasn't he? And so now he's more dedicated to his painting. He went on galleries. He went to Paris. He went on different salons to demonstrate his painting job. Unfortunately, he never won he tried to have one, dedicated, kind of a expo for his work, but the club wouldn't accept him. They thought his painting was outdated. That was not, nobody would be interested in it. And until then, he was able to sell one painting, okay, on commission. In between, he was basically sponsored by his brother, younger brother. He sold, well, basically, he didn't sell. He just donated all his paintings to his younger brother for exchange of living stipends. That's how he was living his life, unfortunately. And then, of course, he went crazy. Okay, he went crazy. As a matter of fact, he got into depression. Oh, by the way, he was very sick. His lifestyle was completely on the opposite side of being a priest. He indulged himself into secular lives, has, dated prostitutes and all that, and he got malaria and all kinds of sickness, and nobody could treat him, right? And he was ashamed. So then he cut his ear. You probably heard that story, right? He painted this famous painting, became more suicidal. In the end, at the age of 37, he killed himself, right? He just blew his head, right? And he died. Ironically, when he was buried in his hometown, there was another person, exactly same name, Vincent van Gogh. You can see, born, actually died 1 year before Vincent van Gogh was born, and they were buried side by side. So somehow people say, of course, superstitiously say, oh, that Van Gogh basically relived, resurrected into this Van Gogh. But nobody knew. Okay, nobody knew. However, there is this tragedy that we get to see. So now the question is, I'm going to show you the next slide. Van Gogh, in the later age of his life, completely lost his aspiration in spirituality. Okay, he was completely lost, right? He said, when I had a terrible need of, let's say, religion, then I'll go out and paint the stars. That's his religion. That's his spirituality at that time. So what a tragedy, right? Now his religious paintings are worth more than the average the paintings of his work, because they're so rare. It was only at his early age he painted those spirituality paintings. Okay, so let's ask ourselves: did the world lose a minister? I guess so. Okay, he has that passion, right? He has that passion. Nobody had, right? Is it so important to have a formal education versus a passion? Well, that's a question mark. A lot of entrepreneurs, real estate entrepreneurs, you didn't go to like a formal educations of a real estate investment or go to school to get an accounting degree, finance degree, but you self-educated. You went to some trainings, shadowing some of the successful ones like Tamla, Steve, myself, right? And you became entrepreneurs. So is it important to have a formal education, right? How about an entrepreneur? Did the world lose an awesome entrepreneur? I think so. He was extremely successful in the art gallery, selling paintings and selling artworks, right? But however, his mind was on something else. He wanted to become a priest, right? Well, ultimately, did we lose a man, a good man or potential man? Yeah, I think so. 37-year-old, he killed himself. All his paintings are worth of billions of dollars, right? But that's not important. We killed the world killed this person's passion, future, but more importantly, his entrepreneurship and his spirituality. I don't know at this point if you can make the connections now. Spirituality, spiritual entrepreneurship is going hand in hand. Okay, I hope you agree with me, right? So what really happened? What really happened to this man? Yeah, what happened to this man? What happened to this story? Well, let's take a look at this picture. Y'all know our train, right? Not like a track trailer, that pull only a couple of sessions. Our trains can pull about 100 or 130 of these cargoes, right? So the question is, do you pull or do you push, right? As an entrepreneur, do you get pulled or do you push yourself? Let's take a look at this picture. Pull is how the train works on a train track. Next time you pass the train track, so watch those trains. It's very interesting. They may have a locomotives at the end of the train to push, but primarily were the 3 locomotives at the front or 2 to pull the train. Okay, especially when it goes up the hill or go down the hill, the pull is very, very important. Okay, push is where the problem is. You can push them, but when it go up the hill, when it go up to the obstacles and the difficulties, when you run into challenges, right? This is where the train is gonna go off the track. Okay, you can't really push it. Okay, you gotta pull it. Well, how do you pull it? That's where the spirituality is. You gotta have a goal above just making money, right? And you gotta have a system to build up the energy, to build up the momentum to pull all these 100 tracks, right? So this is where we talk about, Stephen and I will keep thinking about how we help one more person to win as an entrepreneur, as a real estate broker, right? Or wholesaler. And we thought about, we need to build a system. That's where Every Thursday we have the deal sharings and deal making exchange workshops like this. And at the night we have another session. And Friday we're going to talk about a broader topics. And every Thursday at 11 we're also talking about other topics other than just real estate deals, because we need you to have a unity of faith, finance, fitness, family, friendship, and fun, right? Because we're going to have some the face-to-face, salon time, and we're going to get some retreat together, right? Invited some speakers to talk about maybe meditations, or talking about financial investments, all that good stuff, right? Because we think you have to have a harmony among these versus just dedicated all eggs into one basket. You know what I mean? Okay. And that's what the Vincent van Gogh went. He dedicated everything into one thing at a time. So he pushed so hard, and essentially he lost everything, right? Including his life. I hope you agree with me. So we need to build a system, or we need to have a system to guard real your spirit, your entrepreneurship, and your spirituality. What is a system? This is from my mentor. He said this very, very nicely. He said this. He said, system is to save yourself some time, energy, and money. In the last demonstration, Tamla talked about how to be a spiritually nice person to deal with the talents. Is it good to be a nice person? Yes, you bet. And in our real estate deals, we're always being a nice person, right? But there's a problem. You got a business to run. You got a family to feed. And the house don't stay there for nothing, right? They cost you money to stay there vacant, right? So how do you deal with people, especially nasty people or people in need, while you still make money? Well, you need to build a system, okay? And you save your energy, you save your money. And Tamala's system was to leverage the property managers, right? We all leverage our strength to do the work ourselves. That's a system. Let's take a look at another system you may want to think about. I know some of you just got started as a wholesaler, as a deal breakers. Great. Have you ever thought about joining someone, shadow someone as a entrepreneur, or you can even get started as a entrepreneur? What is an entrepreneur? Have you ever heard about that term, entrepreneur? Probably not. Okay. So when I'm teaching at UT Dallas as a professor at an MBA, I teach entrepreneur, and I also teach entrepreneur. What is an entrepreneur? Entrepreneur is on your job, in what you're doing now, you can leverage the resources and the system to do something extraordinarily before you become an entrepreneur. Is a good transition from a job into entrepreneurship. I hope you understood that. So what is entrepreneur? Entrepreneur, you leverage the existing system to build up your leadership, your vision, your skill set, your process oriented, kind of a discipline, your value creations, right? Because you will need those when you become an entrepreneur. However, in entrepreneurship, nobody has the time to teach you unless you shadow someone, right? Tamla, Steve, myself, and many of our network friends, partners, they allow you to partner and shadow with them. However, most of the entrepreneurs wouldn't allow you to bother them because when you learn, you become their competitors, right? So for you to get started on entrepreneurship, I always caution my friends in entrepreneurship to start as an entrepreneur. Do something new in your current job, in what you're doing now, okay? Build up the skill set, build up the muscle before you start climbing the Everest. Make sense? Okay. So, nurturing entrepreneurship shortcut. Entrepreneur, you need to promote your deals. You need a product. You need properties to sell. And you need to provide the services. And you need to have a good location to build your business on. You need the equipment, you need the tools, and you also need the people to work with you. As entrepreneurs, everything is questionable. Everything is questionable, especially when you just got started in the first month. And people say, oh, I will, because people say, no, my trainer says I'm going to make deals in the first month. Don't listen to that, okay? Don't count on good luck and rolling the dice. Entrepreneur, you need a 90 days to build a habit, build a system, build a discipline to get started. Okay. Remember those days, 90 days. Okay. But as an entrepreneur, that's different. You don't have to promote your own product. You can promote somebody else's product to practice and build up your muscles. You don't have to worry about a product. You don't have to worry about a service, location. Everything is taken care of. This is the shortcut to become an entrepreneur. You got that, folks? So I actually did that, right? When I was working with Motorola, that was my first job. I love that job. And I became very successful too. But not only on my job, I also did something in Motorola, build a club, build a entrepreneurship, salon. And I built all these stuff and I try to find people who share the same mindset. And I did that for years. I even created that to get fundings from the upper management, $20,000 every year. I got money to spend. Huh, really? You got free money from us? Yeah, $20,000 every year. I buy T-shirt, I buy for people food, and I invite them into a golf course and all that. I have my budget, okay? And I even had a title for doing what I was doing. So that built up my entrepreneurship muscle, folks. Why don't you do that? Well, you're afraid of your boss? No, go around your boss, right? There are always someone in HR, in some other departments. They are looking for aspiration, looking for passionate people to build something interesting for other employees. Do it to build up your muscles, your leadership. Okay. It was at that time, UT Dallas recognized me being a strong leader, and they invited me to become an entrepreneur a professor. Young age, and I was teaching a bunch of executives, right? And that's the whole notion about building that. So let's take a look at what entrepreneur and intrapreneur have in common. You design nothing from scratch. Entrepreneur, intrapreneur, same thing. You got to collect those golden nuggets. And you need to be able to innovating at a certain point, at a small scale, connecting the dots. Show your boss, show your colleagues something you see that they don't see. That's called innovation. Then you're going to be able to build your own rules. Okay? As an entrepreneur, you can build your own rules. You can set up the boundaries. You can set up the bylaws. You can set up your budget. Okay? Because you need those skills when you become a real entrepreneur outside of a comfort zone. Make sense? And ultimately, now you can sell it to anybody. That's how I sold my club to the upper management and get $20,000 budget every year, right? It's not that difficult. It just takes some gut to do it, right? So that you don't build a solution in search of a problem, right? Okay, hopefully you got it jazzed up by my thought. And you all saw this chart. This is from Robert Kiyosaki. His second book called Cash Quadrant. And he has a game called One-on-One Cash Flow 101, right? A really good game, really good topic, really good book too. And I encourage you to read that. So we all wanted to become entrepreneur, business owners. I don't disagree. That's a good aspiration, good dream, right? We all want to be here, become a business owner, become an investor. Don't you want to be an investor? Yeah, me too. But how do you build the muscles, build the skills, get the resource to do that? Well, that's where you start from an employee, right? A lot of people say, John, tell me, what is the best employee, I should become or should take on? I said, you know what? Go become a waiter or waitress. I said, how come? That's so stupid. You make so little money. I said, you know what though? You make the money out of nothing. Do you know that? It's somebody else's shop. You don't even cook. You don't even buy your uniform. But you make 10% guaranteed commission. Okay? Well, they're mean customers, don't give you a tip, but you make a base salary plus 10% commission. Well, as an employee, how much commission do you get? 0 to 1%. Do you know that? For all the values you created, you only make 1% out of the value you created. However, as a waiter or waitress, you make 10%. How good that is. It's an awesome idea, right? Yeah, I know I'm smart. Yes. But of course, you're not happy with the base salary, everything. So what do? You build that up as an entrepreneur. Okay. I highly recommend you to read a book. Okay. This book is by John Maxwell, the I would call the most spiritual entrepreneur I've ever seen in the world. Okay. Most people either being very spiritual or very entrepreneurial. And very rare you see a good combination of both. John Maxwell is one of those. He built a successful church and ultimately become a trainer of all entrepreneurs and leader of all leaders, right? He wrote this book called The 5 Levels of Leadership. He talked about first is a position leadership, but then is a permission leadership, then is a production leadership. Ultimately, you become a people developer and the pinnacle. Win all together, right? Read that book, and in the future, Thursday we're gonna read some books as well. So Steven and I talking about starting from next week, because I finished this series about spiritual entrepreneurship. What do we talk about? And we're kind of baking our idea. Potentially we're going to talk about financial knowledges. Okay, tax knowledge, investment knowledge, stock market, mutual funds, and life insurance, health insurance, all that stuff, because we think people need that. So before I end, I would like you to just look up at this. I'm sorry for the fuzzy fonts and everything. This is where a good sharing by Thomas Paine back in the 1776, Entrepreneur's Creed. Okay, I do not choose to be a common man. It is my right to be uncommon if I can. Oh, I love that. I love that. I seek opportunities, not security. I do not wish to be a kept citizen, humbled and dulled by having the state look after me. Oh, isn't that a lot of people still live on the stamp? Yeah, I wanted to take the calculated risk to dream, to build, to fail, to succeed. Oh, so good. I suggest you, my friends, I'm going to erase my marks and just snapshot this. Every day when you wake up in the morning, this will be the best affirmation, right? In the end, he says, it is my heritage to stand erect, proud, and unafraid, to think, to act for myself, to enjoy the benefit of my creations, and to face the world boldly and say, this, with God's help, I have done. I run the race. I fought the fight, right? This is the creed of entrepreneur. With that said, my friend, I encourage you to continue this thinking, combining, integrating, harmonizing finance, family, faith, fitness, and with fun and friendship. That's how we expand our business together. All right. With that said, I'm going to yield my stage back to Steve to see if you got any questions or we'll
Thank
continue.
you, John. Really
Yes.
love to talk. And the last, the Entrepreneur's Creed, it gave me some chills when you were reading it.
Mm-hmm. Me too.
And, open up on the floor for your questions. One of the questions I have, John, is I really love the entrepreneurship and being an entrepreneur and an intrapreneur. And in fact, at Real Estate IQ, that's kind of what we're trying to nurture here
Exactly.
as well.
That's how we built them. Yeah.
What would you say are the main lifestyle differences between entrepreneurship versus intrapreneurship?
Yeah. Entrepreneurship is very easy to get people stay in a comfort zone, relax too much, right? Entrepreneur, you have to stand on your toes almost in your dreams, right? When you wake up, you stand on your toes. When you dream, you still stand on your toes, right? You are always alerted. But entrepreneurship, people are too relaxed, okay? Because there is no strain, there is no risk, there is no deadline. So I would encourage people to borrow the entrepreneurship alertness or mindfulness to drive the entrepreneurship in your company. And as a matter of fact, let me give you the tip, because I do executive coaching as well. I help people to get promoted. One of my students, he was a senior manager in one of the biggest, the top 10 companies in this area. when I was teaching him, he was a lot older than me. I got him promoted to senior director and ultimately the senior VP of supply chain in that company. And anyone looking for a job, I sent him a resume. He hired them, right? So the one thing I taught him and trained him on was to stay alert, vigilant, leverage the entrepreneurial mindset to run his company, run his job. That's how he got notified and noticed, get promoted all the time. So entrepreneur, we need to borrow some entrepreneurship as well. What is that? Is that fear, okay? Entrepreneur usually don't have a fear. However, entrepreneur always get bogged down, not by risk, but by fear. The fearfulness, that's the biggest enemy the entrepreneurs had, okay? So you need to borrow from each other and to be fearful. I mean, the fearless as an entrepreneur. But meantime, stand on your toes, be vigilant as an entrepreneur. Okay, Steve? Yeah, I hope that answers your question.
Thank you. I'm really excited about the financial literacy that we have. We've been kind of brainstorming and coming up. In fact, I think what was about 3 years ago was when, because you can never know enough finance. I feel like if you feel like you know, man, there's a whole world that opens up to you when you start really study. And so in order to continue to grow as an entrepreneur, you just gotta understand your finances, understand how to manage money and capital and all that it's all part of the growth as an entrepreneur. So we're really excited to bring that to everybody.
Yeah, we like you to benefit from all topics that we think as entrepreneur, because Steven and I, we're both entrepreneurs, serious entrepreneurs, right? Because what we think, what we dream about, what we lose sleep about, we want to bring to the table to help you build. So you don't have to look for the materials information, right? That's what the system is about. We hope to build this enterprise with you, right? In success, in buying the deals and dealing the deals, dispose those properties. We build the system together, so one day we can be Robert Kiyosaki too, right?
You know what? I was gonna talk about upcoming events, but I just want to say this one thing is that I think as an entrepreneur, you just learn so much faster. You're just put in the situations that you're just forced to learn, and then obviously if you're curious, you learn too. You learn really fast too. But you're just you just gotta pick up a lot of things really fast because of the pressure, and maybe there's some anxiety and fear in there, and obviously you gotta be fearless in whatever problems that you face too.
Speaking about that, Steve, I am going to coach a entrepreneur in my office. Basically, that's why I can't meet you in person today, unfortunately, because this person is an entrepreneur and he's running a pretty big shop, tens of millions of a budget every year, right? But he's running into depression and then anxieties. And because of that, because I went through that as well, Steve knew that, I went back to school and get a degree, get a certification as a spiritual director to help people as a counselor to go through these anxieties and to build a relationship while they run the business. So I'm officially a spiritual director or a soul doctor, right? They call it a soul surgeon or soul physician. And I'm a soul physician too. And I think that's important. That's why what I say is faith, fitness, finance, family, friendship, and fun all together. You can't just focus on, people say you prioritize. Nah, you're not a clown. I'm not a clown. I cannot prioritize, throw the balls in the air to catch them. No. We harmonize all together, okay? And that's something I truly believe in for the last 10 years, and to build up my muscles to help one more person to win, right? So that's what the individual I'm coaching on, right?
Yeah, I think entrepreneurial fatigue is real, and we have so much more opportunity to talk deeper about this, like the mental health side. How do you keep having that perseverance and mental fortitude?
Yeah.
But anyway, that's for a little bit different time for this topic. We're gonna go very, very deep there. Maybe we can have a panel discussion on that.
We should. I really think, I mean, if everybody voted like Ethan, right? If you vote for it, we can definitely do that. Because I went through that. I have so much anxiety to build a 7-figure, 8-figure business. And I lost sleep. I lost, almost got divorced, right? Because so much of pressure. And I lost contact with my kids. I got sick. I got cancer. You don't even want to know my life. It went so much of a, turbulence. Then I decided, you know what? I need to find my serenity. All right. I need to find my peace in what I do. I love entrepreneurship, but I also love my families, my life too. Right. How do I, have a harmonized life that people can model? Because if people just follow me to become a successful entrepreneur, they're gonna kill themselves, right? That's what happened almost to me, right? Depression, all that. So I learned all these stuff. So you don't have to go to school to learn all these stuff, right? And we can share. And again, here, Stephen and I will build this platform that we share for free. How about that? We truly believe all these should be free. Nobody should be charged from that, right, Steve?
Yeah, I mean, I went through that cycle too, and John, you were just like right there with me, and I think just kind of when you're too lopsided on one side, and you everything else kind of falling apart, it's not a full success, and so you kind of really need to have a very fully well harmonized everywhere in order to kind of fuel your success. I think, one thing that I remember a lot from our earlier conversations was you can't pour from an empty cup. You gotta fill your own cup first, and then everything good is gonna come out of it.
Yeah,
I really appreciate that.
absolutely. Good talk.
Okay, so a lot of things to look forward to, including upcoming events. Just the next few days. Tonight we have pre-foreclosure gold mine. This is one of our most popular classes, talking about how you can dig gold in the pre-foreclosure deals. We're constantly talking to owners and making deals, and they're super motivated in terms of the folks that are in pre-foreclosure. And then tomorrow we have a deal maker meetup where we're gonna actually discuss and talk about the actual things that you got to do, right? Because you can talk about concepts all day long, but rolling up our sleeves, like how do you fill out a contract, right? Line by line. We actually went over that last week. And then we have John. John is our main speaker at the Friday open house, just talking about how the big picture of the platform that we're trying to build here. And then Saturday, we have a replay for pre-foreclosure gold mine, just in case Thursday night is not the night for you for learning. We have Saturday morning. Okay. I know some of you have requested to, hey, I want to learn more. I want to take advantage of some of the promotions that Real Estate IQ have. You can also scan this QR code. Just pick up your phone and scan that. It'll take you to a link where you can fill out the form and request. And finally, this is our last slide. I want to encourage you to take actions and start your real estate journey with us. And really appreciate everybody here. We're already almost 15 minutes over, and the fact that you're still here means that you're a serious player, just like us. And we look forward to connecting with you in person. And let's do some real serious business together.
Amen.
Here's that fun. All right.
Wonderful.
Have a good day, everybody. See you all soon.
Good day. Bye, everyone.
Bye-bye.
Bye.